Hey, and welcome this noon hour to Talking Insurance or Insurance Basics as part of Central National Bank's Your Money Matters Month. I am Jeff Underhill, Insurance Agent here with Central National Bank, Central Insurance Agency, but we're all one and the same. And today we're just going to go briefly over some insurance basics for your home, your auto, renter's policy, and that sort of thing. So without further ado, we'll go ahead and dive right in. So your auto insurance is basically going to cover obviously your car, your liability, and that sort of thing. One of the most common questions that we get here at Central Insurance Agency is what's the difference between full coverage and liability? And realistically, we always put full coverage in quotes because there's not really such a thing as full coverage, but that's what most people refer to as having comprehensive and collision coverage on their car. So the biggest difference is liability is the state minimum requirement. Every auto insurance policy has liability coverage with it. And so your liability coverage is going to take care of you if you hit somebody else's vehicle or a tree or a light pole, something like that. Your liability coverage is going to provide some money to repair or replace those things. Whereas full coverage also includes comprehensive coverage and collision coverage usually. And so comprehensive coverage is your protection if you were to hit a deer, hail, theft, vandalism. That's all under your comprehensive coverage. Collision is hitting anything else. And I actually use this story quite often. I had a customer a few years ago who hit a deer. That's comprehensive coverage. They paid their $500 deductible. The insurance company repaired their vehicle and everything was good to go. Flash forward, 2-3 months later, I have a customer come in and say, "Hey, I had a dead deer in the road and I hit it." We submitted a comprehensive claim. The company came back and said, "Nope, that's collision," because at that point it's an inanimate object. So it's good to have both comprehensive and collision coverage because you never know what could happen and how you're going to need your car repaired. So this is auto policy, basic auto policy. Every insurance policy is going to come with a declarations page right up front. All of your vehicle and what's covered and not covered is typically right there up front. So you'll see here, this is an insurance quote for a 2008, or insurance deck page for a 2008 Chrysler 300. Here's their liability limits. Liability limits are $250,000 per person, $500,000 per accident, and $100,000 in property damage. And so those are the limits that the insurance company is going to pay out if you were to hit somebody or something and cause property damage to a vehicle, a house, a pole, something like that, or bodily injury liability to somebody else. Uninsured, underinsured motorist is also state mandated. That again typically mirrors your normal liability limits. And then down here you'll see comprehensive and collision coverage with a $1,000 deductible on this policy. Again, comprehensive coverage is going to be deer, hail, theft, vandalism. Collision is hitting anything else. So if a deer runs out in front of you, go ahead and hit the deer. Comprehensive claim is easier to deal with than swerving, hitting a guardrail, and then you have a collision claim. On this particular policy, there's also roadside assistance. Most people and most insurance carriers do provide some roadside assistance through your car insurance policy. So, you have a flat tire on the side of the road, look at your insurance policy or visit with your insurance agent and see if you have that coverage, because it's a heck of a lot easier to just call somebody and bring a receipt or have your insurance company pay for it than to try and handle a tow bill or anything on your own. So these are the basics on the auto insurance side of it. Another very, very, very common question that we have that we get is how do I get my car insurance cheaper? And so safe driving taking a defensive driving course, and good student discounts for teen drivers are very, very easy and quick ways to get discounts. Most insurance carriers want to be able to save you money. They advertise about how to save you money. So visit with your insurance agent or come visit with us, and we'll help you navigate your insurance policy and see if we can maximize your discounts for you. The good student discount with most insurance carriers, it's a B average. I know as a parent of a high schooler myself, you know, I really stress to my son, you know, one, you need to have a B average anyway, but hey, it's saving on your car insurance. The defensive driving course as well, with most carriers, the driver's ed that teen drivers go through counts as a driving course. Again, that's a discount there, so ask us about that. And then the safe driving, that's your accident-free discounts, claim-free discounts, however you want to call it. And now more and more insurance companies are going with telematics, where you can download an app and it tracks the time of day that you drive, and they give you discounts based on that as well. So on to homeowners insurance. So your coverage A on your homeowners policy is the coverage for your home. It's your house. If it's your renter's policy, it's your landlord's house, although most renter's policies don't have any or very little coverage for coverage A. Coverage B on your homeowner's policy is other structures, things that are a part of your house but not necessarily attached. So a shed, a fence, things of that nature. Coverage C, this is the one that people care about. Coverage C is all of your stuff. It's usually on a homeowner's policy between 60 and 75%, depending on the company, of what your home is covered for. So if your home is covered for $100,000, your coverage A at $100,000, your coverage C is typically $75,000 for all of your stuff in the house, which, you know, a lot of people, when they come and visit with us and we're going over their homeowner's policy, they say, oh, well, I don't have $75,000 worth of stuff in my house. But when you really start to add up all of your clothes, your furniture, your electronics, it's really easy to hit a high number. And then your coverage D is on all homeowners policies as well as your renter's policy. So if you have a covered claim and you cannot stay in your house, so an example, the kitchen catches fire, and you know, while they're cleaning up and rebuilding, I can't live in my home. Coverage D allows some money and expenses for you to live someplace else while the repairs from a covered claim are getting taken care of. Coverage L is your liability on your homeowners and your renter's policy. This is really, really important. This is really, really important because this is what truly follows you around. So if you're in your car and you were to hit somebody, your liability coverage takes care of you up to your limits for bodily injury and property damage. But what happens if I'm at a grocery store and I hit somebody with my shopping cart? That's not associated with my car insurance, so where does that liability come from? And it usually comes from your homeowners or your renter's policy. So your liability follows you everywhere with your home policy. So again, that example of hitting somebody with a shopping cart or the shopping cart getting blown out of your hands in the parking lot at a grocery store. Also seen a claim where a gentleman grabbed a 2x4 out of a rack at a home improvement store, and it fell and caused some damage to, or bodily injury to somebody else. That's where your liability comes in. And typically on your homeowner's policy, we want you to try and have that to mirror your assets and protect you from any lawsuits or anything that could come up from that. And then another coverage on your homeowners and your renters policies is the medical payments to others, your coverage M. Medical payments to others, it's typically a relatively low amount, $4,500 or $9,000 in medical bills. And what that does is that protects you if you invite somebody over to your home, they trip on the garden hose walking up to your front door, fall and sprain their ankle. Your homeowner's policy will provide them with some monies to pay for their medical bills. and that also helps protect you from getting sued for your total liability limits. So this is a typical homeowners policy declarations page. So again, here you're going to see the residence. The coverage A is set at $257,500. So if this house completely burns to the ground or a tornado takes it away, that is the maximum that the insurance company is going to pay to help them get back to where they were. Then you have your private structures set at 10% of what the home is covered, so $25,700. Personal property replacement cost is set at 75%. So in this particular case, the home is covered for $257,000. There's about $154,000 for all of this family's stuff in their house. Additional living expense is set there, and again, that's a percentage with this particular company, but that's to cover them if they have a claim and can't stay in their home. Down here, you're going to see their personal liability set at $500,000. That follows them around wherever they go, grocery store, church, wherever you may go. You cause damage or bodily harm, your homeowners is there to protect you. And then medical payments to others here is set at $5,000 with this company. And then down below here, you'll see different options and endorsements, and every insurance company is different. And that's one of the advantages of working with an independent insurance agent, such as ourselves inside the Central National Bank branches, is we can work with several different companies to really find a policy that works best for you. So in this case, this family has a finished basement in their home, so they have backup of sewer and drain in their house, as well as an equipment breakdown coverage that helps provide some coverage for the things that aren't automatically covered for their home. Any questions on that? Any questions from the folks here? If not, we will go on. We have just a few more slides here in our presentation. Life insurance is another product that we offer here, both with our insurance agents in the branches, as well as our trust officers and the different trust branches that are across the state. Most common question that we get is, what's the difference between term life insurance and whole life or permanent life insurance? So term life insurance is typically a policy that is in place for a specific term in your life, such as I have young kids. So, hey, I just became a dad, I bought a house, got married, became a dad. You know, my need for life insurance, if something were to happen to me, is really, really high. You know, if I pass away, my wife is going to be stuck with a 2-year-old and not have my income, so I want to put a policy in place for the next 20, 30 years that is going to protect her if something were to happen to me while my children are still at home. So the term life is typically a little bit more affordable for a higher amount of death benefit, but that, again, it's set just for that specific term. So, you know, most life insurance companies will allow a 10-year, 20-year, 30-year term. Whereas a permanent life insurance policy or a whole life insurance policy, once you set that or purchase that policy, those premiums are set in stone, they never change. So a policy that is typically in place for as long as you continue to pay it, it can be paid up in full, paid up or in full with most life insurance companies. So just a scenario, me personally, I have 2 children at home and a mortgage that I still have 17 years on. So I have a term policy in place that will help take care of the mortgage. That way, if something were to happen to me, my wife gets a check and she can pay off the house and some of our debts, and then those become assets and not liabilities for her. But I also have a smaller $25,000 whole life policy that I purchased about 8 years ago when I was a little bit younger. It was a little bit cheaper. That premium's never going to change or go up. So as we move on and I pay off my house and my kids move out, that term life can go away, but I still have that whole life policy sitting back there. That way, when I come to end of life, my wife has a little bit of money to help throw a big party and have a nice funeral for me. So most common question that I get, the first question as soon as I'm meeting with a husband and wife. You know, do we need life insurance? Do we not need life insurance? So who needs life insurance? Everybody. I have a feeling and a belief that everybody has has a need for life insurance. So if you owe somebody money or you love someone, you should probably have a life insurance policy in place. Now I do put an asterisk here, and that asterisk is just simply some people have so much money in the bank and so many assets and everything is in place and they've done a great job planning for themselves. That person might not need life insurance, but a lot of times, young family, young homeowners, that sort of thing, there is a real need for life insurance there. So if you have any questions or anything above and beyond there, or if you just want to visit about insurance, again, my name is Jeff Underhill. My contact information is here. Although most branches with Central National Bank have an insurance agent that's assigned to them, takes care of the bank customers as well. So you can visit with any teller or any loan officer at the Central National Bank branches, and they can get you in communication and visiting with one of our central insurance agents, and we're happy to help, see how we can assist and provide any information and guidance and hopefully get you and your family taken care of. So that being said, that's all I have for today. Thank you guys.